Hi, my name is Daniel Brown and I'm the CEO of Myriad Real Estate Group. Today we are going to talk about, I want to sell, but then where do I go? I field this question all the time. I've got a lot of clients that we've helped over the years that want to take advantage of these high prices, the seller's market to sell their home, but then they inevitably always ask, but where do I go? Typically what I tell our clients is, if you don't have to move, you shouldn't. This isn't the market where, unless you're fulfilling a need, I need more space for my growing family. I need less space because I'm an empty nester. I need to move for work. I need to be closer, or now I have the luxury of being farther away, so I need to move for that. So unless you're fulfilling a specific need, I don't necessarily think that this is the time to do anything. And so that's typically how I advise our clients when it comes to selling and buying, just in general. But if you are wanting to take advantage of these higher prices and the seller's market, it's an incredible time to do so. And so what we end up doing for our seller clients is selling the home is, I don't want to say that it's easy, but it is not as hard as buying right now. What we typically do for our sellers is we will prep everything for them to get their home ready to sell. We will take photos, we will have our professional interior designer walk the property with them and tell them what to do. We do everything on the front end to get their home ready to sell. We even put it in the MLS, but we don't make it active. So the only one that can see it is me. Then we go out and we go home shopping. We start writing offers on properties, and we look for a home and try to get them under contract on a property. And that can take writing many offers. So as we're doing that, once we get them under contract on the home we're going to purchase, we then list their home, make it active in the MLS. Homes are typically selling relatively fast, so in just a weekend typically with us. So if we list their home and they sell in that first weekend, we set the sale to close before their purchase. But we are literally putting the cart before the horse and finding the home they're going to buy first, and then closing on their sale prior to the closing on their purchase. Make arrangements for a post-possession, which a seller here in Arizona can do up to 60 days based on Fannie Mae and Freddie Mac guidelines if the buyer of their home is going to be an owner-occupant. So you can do a 60-day post-possession where you get to stay in your home after closing, which makes the transition and the move from house A to house B super simple. Other options that you have are the iBuyers, which I've talked about in other videos that I'm a fan of. You can sell your home to them, and this comes in really handy if you're working with new builds and new construction, because the build time is super long right now. 12, 18, 24 months tends to be what they're quoting. And because the builders are taking longer to sell to build their properties, they are not giving you any flexibility on you selling your home. So the iBuyers come in really handy because they will go under contract with you today, let you stay in the home for the period of time that it takes to build your new house, give you that post-possession as well. The downside is you're agreeing to today's price, and you're still making your mortgage payment, and you're still living in the home for the next 9 to 12 months. So as the home appreciates in value, the iBuyer gets that appreciation, you don't, but you get the flexibility of being able to wait for your home to be finished and don't have to find some sort of short-term rental situation while your home is being built. So that is an option, and it can be a good one for certain people, especially in the new build process. If you are moving out of state, that is a really good time to obviously sell. There are cheaper homes and cheaper prices in other parts of the country. Phoenix has gotten very expensive, so we've had clients who are cashing out of their homes here for their retirement, moving to cheaper areas, buying a home there, and adding the sale of that home here to their retirement portfolio. So the other question I field a lot is, if I sell my house now, it's gone up a lot in value, but so has everything else around me. It is more expensive too. So the way that I describe this to people is, if you're, let's say you're selling your home and it's worth, you're going to get $500,000 for it. And for you, the next home that you want to purchase is, I don't know, $750,000, $1 million. That's kind of a big jump from going from a $500,000 house to the next one. Your down payment should be heftier because you're getting a higher price for the home that you're selling, so that should help out some. The other thing to consider is that the appreciation that you're seeing is the appreciation on the total value of the home. So you are earning appreciation on a $750,000 or $1 million home versus the appreciation that you're earning now is on a $500,000 home. So appreciation on something that's more expensive is going to increase your wealth faster, right? So let's say the market is earning on, which this is below where we're at right now, but somewhere between 7 to 10%. So would you rather earn 7 to 10% on $500,000, or would you rather earn 7 to 10% on $750,000 or $1 million? The other trade-off that I talk about with clients is that you've got to view your mortgage as an investment rather than a debt or a payment. So if you've got a mortgage payment of $2,000 a month, view that as a deposit into a savings account, a deposit into an appreciating asset that is going to return on your investment rather than a debt. And the wonderful thing about owning a property is that the appreciation that you're earning is not on your down payment, it is on the total value of the property, which is why the appreciation on real estate is so much better than the interest that you earn on, say, the stock market. So if the stock market, which on average returns in the S&P 500 over history is 10%, you're only earning 10% on what you invest and then what that compounds. On your real estate, you're putting your down payment. So again, let's say it's $1 million and you're putting 20% down, that's $200,000. You're earning not just on the $200,000, you're earning on the $1 million. So there's not very many asset classes where you can invest a smaller amount but earn interest on the total amount. So you're earning interest not just on the down payment, you're earning it on the total value. So that's why my belief is that the quickest path to wealth is through home ownership. And so changing your mindset of I'm selling my $500,000 house and I'm going to $750,000 or $1 million, that's why it's still a good move. Still a good time to do it. Interest rates, while they have popped, and I think they're going to continue to go up, are still below historical averages. The historical average for a mortgage rate over the last 20 years is 4.25%. So we're still below that, and so you're still in a really, really good position from an interest rate standpoint. And I think that there's still legs in this market where you're still going to see a higher appreciation in the short term because of just supply and demand dynamics. And so that supply of homes is so low, the demand is actually higher than normal right now. So that appreciation is going to continue for the foreseeable future. And I don't see where that is going to change anytime soon. So that's why it could still be a good time to take that leap, even though you're going from a home that's worth $500,000 that you may only owe a certain dollar amount to a more expensive home. You're increasing your overall net wealth. The next question I get is, well, my mortgage payment goes from this amount to this amount. So typically your mortgage payment is going to go up. But again, if you view that as a deposit or an investment into an asset, my argument is that maybe in the short term you decrease how much hopefully you're investing in your 401ks, your Roth IRAs, and you're planning for your retirement. If you bring those investments down, and you should always be contributing towards your investments if your employer matches. So if your employer matches 3 or 4%, you should always do that as the minimum, but decrease how much you're putting towards those assets and shift that over to your mortgage payment, which is also an investment. You're just reallocating what investment vehicle you're putting money into. And for most of us, we get raises, we get promotions, we get better jobs over time. So as that happens, you can then start to increase your contributions towards your 401k, your Roth IRAs, and those other investments, where your mortgage payment will stay the same. It's not going to change. So you get to kind of do those things. So another option that people have is you can sell now. So if you're in the environment where you think I'm totally wrong and full of shit, that the market's going to crash and go down, then take advantage of this market and sell. and rent for a period of time and wait and see what happens. So we do have clients that are, I want to cash out. It's really easy to be a seller in this market, which is absolutely true. I want to take these funds. I want to apply it towards a business venture. I want to do this. I want to do that. And I'm going to rent for a period of time. I'm going to hope that you're wrong and that the market is going to come back down. And I could be wrong. I have no idea what the future is going to look like. So taking advantage of this seller's market and selling, cashing out, and going and renting for a while, that is also an option. I will tell you that rents are extremely high right now. It costs more to rent a home than it does to buy. But if you think that I am wrong, that is another avenue that you can take. And we have clients who want to sell their home and turn into a renter. They like renting. When you're renting, you have no responsibility to the property. There's no maintenance that you have to do. There's no repairs that you have to do, and it's a lot less responsibility. So if you fall into that category, then selling now, taking advantage of this market and turning into a renter, there's nothing wrong with that. That is a path that some people take. And again, if you fall into that category, I may try to convince you out of it, but I would still end up supporting you in the end if you think that's the best thing for you and your family, is to sell now, rent for a period of time, and see what happens. There's a lot of headwinds that are facing the world right now between the war in Russia and Ukraine. We've got inflation that's going through the roof. Our country's never been more divided than it's ever been before. There's a lot of stuff coming at us, and so there's any number of these things could derail the economy, derail markets, and cause things to change. I think that the housing market is on really stable ground and don't think that these headwinds are going to greatly negatively impact the housing market, but I could be wrong and it absolutely could happen. So selling now to rent is definitely an option. Thank you so much for tuning in. If you have any questions or comments, leave them below, and we will see you in the next video.